Well, good afternoon, Jack, Dan, Gina, and the rest of the Pierce Co team. Evergreen Capital is happy you asked our firm to work with you all, and we're excited to present our findings on Project Triple Play. So we put together a senior heavy team, and we can go ahead and get started with those introductions.
Great, thank you. Hello, everyone. My name is Kyler Barnard. I am the head of mergers and acquisitions here at Evergreen Capital and have roughly 20 years of investment banking experience. I'm excited to work with you all.
My name is Jaya Jolly, and I'm the head of media and telecommunications. I have 18 years of investment banking experience and look forward to working with you all.
Hello, everyone. It's great to speak with you once again. I'm Pavan Modi, head of leveraged finance at Evergreen, and I have 15 years of private equity experience.
Hi, everyone. I'm Ryan Murray. I'm the head of equity capital markets, and I have 17 years of experience here at Evergreen.
So this is just today's agenda, what we're going to briefly touch on right now. So we'll start with an overview of Evergreen Capital for those who are less aware of us. Then we'll dive into some of the key issues with a situation overview and evaluation of broadband's current offer on the table. We will follow that with our valuation summary and consideration of the alternatives and what we believe is the best for you all, finishing with our recommendation, and which will entail our negotiation strategy and estimated deal timeline. So Jaya, please kick us off.
Great. So to get the ball rolling, I'll provide a brief overview of Evergreen Capital Services and some of our more recent accomplishments. So first off, our firm is headquartered in Portland, Oregon, which is not far from your location in Northern California. And with our proximity, we have a better understanding of those rural areas, which will ultimately help us assess your operations. Additionally, Evergreen Capital is a leader in mid-market investment banking, sales and trading, asset management, and equity research. We have plenty of M&A experience with focuses on the media and telecommunications industries. However, our actions do speak louder than words. With our deal accomplishments, we've received numerous awards, including our most recent and prestigious accolade of being named Forbes 2020 Mid-Market Investment Bank. Overall, at Evergreen Capital, we're committed to providing our clients with the utmost quality and professionalism to help you achieve your goals. Now I can take everyone through our firm's more relevant deals that will help Evergreen assess Project Triple Play. So in our most recent projects, we've advised deals on both the buy and sell sides. In fact, this past year, we worked with Broadband Co. in advising them to sell select services. And then in our more previous deals, we worked with several triple play companies, which helped us better understand the industry. We also worked with Broadband Co. in 2017 by helping them close a $70 million acquisition of Premier Company. And since we've been working with Broadband Co., we're familiar with their management team, and we understand how they think on both the buy and sell sides.
Great. So this slide is basically going to discuss what are we about today. So first and important, you all have received an unsolicited acquisition offer from Broadband Co., and we believe it is worth much less, about 44% less, than it actually appears. With this in mind, we have considered various alternatives and compared them to determine which best meets the value of your company. And last and most importantly, we understand that this is a family company and we want to balance all the interests of liquidation and desires for future ownership.
Now, taking a look at the offer that you received from Broadband Co., at first glance, it appears to be worth $170 million, but as Kyler mentioned, upon our initial review, we believe it is worth far less. Looking through each consideration of the offer, we look first at the stock portion. While Broadband Co. has valued their stock at $35 million, we believe that because of market or acquisition news and market speculation, it is worth far less. Additionally, there will be marketability and liquidity issues because those shares will be locked up for 3 years. Moving down to the seller note, this is a illiquid, subordinate, unsecured note. Recently, Broadband Co. has had issues with raising this type of debt in their second lien type debt, so we believe that once that note hits your hands, it'll be worth more like $48 million. Finally, cash is cash, so there's no adjustments to be made there. Any portion of the offer that is made in cash will be what you see on your end. In total, we believe the estimated value of this deal is really more like $95 million, which is $75 million less or 44% less than that first glance value.
We believe that the fair value of your equity is between $155 and $180 million. This represents at least a 40% premium to Broadband's initial offer value. We conducted extensive quantitative and qualitative analysis, as well as conducting both the income and market approaches to arrive at this figure. First, looking at public comparable companies, we believe that this is a good benchmark, but is not truly indicative of the fair value of your equity. These comps don't have the same competitive advantages that your company has and does not factor in the premium paid within a transaction. We put much more weight on the transaction comps and believe that this is more indicative of the fair value of your equity. We also performed a discounted cash flow analysis. In the dark green is a discounted cash flow without synergies to Broadband Co. And in the light green is in addition to synergies with Broadband Co. Though a buyer will typically not pay for all of the synergies, we believe we can use this to get you the best price possible.
We also understand that you expressed interest in looking at financial sponsors, specifically the 3 private equity groups that indicated that they may want to acquire a company like yours. After our analysis, however, it is evident that these types of groups will not be able to make an offer anywhere near your fair value of your company. The debt required to make a reasonable deal will simply not be able to be raised, even with the assistance of a financial buyer. With all that in mind, we'd like to make an initial counter offer to Broadband Co. at $190 million, which, while above the fair value range, we believe is a strong strategic option in order to end up at or above the fair value of your company by the end of negotiations.
It's important for you to know all of the options on the table in making such a big decision for your company. We strongly recommend that you engage with Broadband Co. They are a highly motivated buyer. This means that you have strong negotiation leverage in price and other terms. We believe we can get you a deal structure that addresses all of ownership's interests. By realizing your equity, you will lose control of your business, though. We also looked at pursuing a broader process. As Bavad mentioned before, going to a financial buyer does not make sense since it will not give you a good value for your business. We believe that you could go towards secondary strategic buyers, as this could create greater competition to push the deal price higher. Other buyers also may be better capitalized and get you a better deal structure in place. With this said, though, there is no guarantee of a better deal, and if you start pursuing other offers, Broadband may back out.
Another alternative we examined was an internal recapitalization of your company. This would allow Dan to maintain his full equity ownership of the company, and Jack and Gina would be able to partially cash out. However, as we have mentioned before, banks will simply not lend you enough money to equate to the fair value of your company, especially without the assistance of a financial buyer. This option also carries with it the extra risk of over-leveraging your company and putting your management team in a position where they are unaccustomed and uncomfortable with the large amount of new debt. Finally, there is a 4th option to maintain your status quo. Let's look back at the facts. Broadband Co. came to you with an unsolicited offer, and you are under no pressure or obligation to take their deal. If you'd like to maintain your company's operations undisturbed, there is a pathway forward for that. However, you would be giving up a significant opportunity to realize your equity in the company. And going into the future, you may face uncertainty as competitors continue to try to expand their operations and steal market share from you. Finally, there is a strong M&A market environment right now, and so there is no guarantee of that coming back in the future if you decide to hold your cards.
Yeah, so going back to our analysis of the Broadband Co. deal and that we have leverage over them, that's why we believe we can ask for the $190 million. So what are our key advantages? Well, Broadband is seeking westward expansion, and your location in Northern California is perfect for that. Additionally, Broadband will experience significant synergies from the deal. They'll save on their expansion plans with your pre-existing infrastructure and experience SG&A cost reductions. Also, Broadband has had many failed acquisition attempts in recent years and are hungry to make a deal. They're also hungry to make a deal because they're desperate for publicity to get increased viewership from Wall Street, and then this will garner increased investors and more ease raising liquidity and other funds. So what is the deal structure we're looking for? Well, Jack and Gina, we recognize you want to cash out, and Dan, we understand you want some form of future ownership. That's why we're recommending, Dan, if you're interested, pursuing some form of managerial position with Broadband. This could be assisting in the facilitation of their expansion to Pierce Co's areas, and then perhaps you assume some role as a regional director. We'd love to talk with you more about this option and kind of gauge your interest to see how we're going to create this deal with you. And it's also important to consider, what if broadband doesn't like this? What if they push back? And what if they want to back out? Well, it's important to understand that, as Pavan already mentioned, we don't need Broadband Co. This was an unsolicited acquisition offer, and you all have every right and reason to threaten to go to secondary strategic buyers and actually do it if you believe it is a better option for you all.
Yeah, so I'll walk us through an overview and just a timeline of the deal process. So first off, we're expecting the sale to take anywhere from 2 to 4 months. And we're going to start off with that counter offer to Broadband Co. by requesting $190 million in all cash and then some of that stock. Next, you all will enter into a letter of intent with Broadband Co. that will provide us a 60-day period of exclusivity during which we can begin some of those negotiations. Then Broadband Co. will firm up their financing, complete their due diligence, and come to an agreement with a finalized contract. We're expecting this part of the process to take around 2 months. Finally, the transaction will go under regulatory review and the sale will be executed. You and Broadband Co. will be able to announce the sale to the public, and we'll expect this part of the process to last between 2 to 3 weeks.
Perfect. So we wanted to thank you all again for your time, and we're excited to work with you all. We're going to fight like hell to get you the best deal possible, and we really believe that we can find something that satisfies all parties through this. If you have any questions, we have our attached appendix for any quantitative descriptions of our analysis. So we look forward to chatting more. Thank you.
I have a quick question. When you look at your recommended $190 million valuation and the structure, how much cash actually does that entail in that offer? And secondly, how confident are you in that Broadband Co. can raise that money given the debt markets where they are today?
For sure. That was something we definitely considered. So for Jack and Gina, we're going to ask for all cash. And then for Dan, we will ask for all cash if you're interested, but it's possible that Broadband will push back with if you have interest in the managerial position, they might ask for a mix of stock and cash. Now we understand asking for all cash could be somewhere in the ballpark. Let's say Dan has to go 50-50 stock and cash. We'll be asking them for 160 million cash. Do we expect Broadband to be able to do all cash? We don't expect it, but we'll ask for it. And then if they push back, they may ask for some form of stock. And then we will suggest maybe another debt term, maybe a shorter debt term for someone like Jack who wants to retire soon. Maybe we can expand it a little bit for Gina, but finding some sort of debt offering, whether it be mezzanine debt, bank debt, that is more secure and that actually values your company at a fair price, as opposed to the debt that they had in their deal, which was not worth as much as it appeared. Does that answer your question?
Yeah, thanks.
If we have to carry any seller paper though, because for whatever reason they can't because they've had some difficulty getting second lien debt, how would you propose restructuring other than shortening the term? Are there other things about that note that are unfavorable to us? It must be because you got a different value of the note than it appears on its face.
Correct. So they have had difficulty raising second lien debt. Currently, their interest on those types of notes is at 15%, and they've recently been unable to raise that amount. We do believe, however, that we can work out a deal where a mezzanine type of debt during a smaller time frame would be possible in order to come to a closer value that is in line with what we believe is possible to that 100 million or something similar, rather than having that massive difference between the face value and the expected value.
So it looks like you're working for us for free. I appreciate that. We're really happy since you haven't discussed any fee proposal.
Yeah, I can speak on behalf of that. So Evergreen Capital has a competitive pricing strategy, and we'll be charging 1% for the first 150 million and then 2% for anything above that.
Sorry to disappoint. we're bankers at heart. We can't work for free. Money's our business.
I was just being sarcastic.
No,
For
a
the
lot
stock
of
portion,
oh, go ahead.
yeah, real quick for the stock portion of the consideration, how are you handling that given the recent inflation of the share price?
Exactly,
Sure. So,
Ryan. Well, I'll take this. So Ryan, if you want to go back to that slide of negotiations, you can. but we recognized it was inflated. So we were going to go more towards the undisturbed price at $5 per share should one of you be compensated with stock, so that you're not losing out on any value should they request the $12, because we don't believe that would be a fair place to put you at a per share value.
Okay, great. Thank you.
Yep.
And my question for you guys, we've seen a lot of our friends that are in the industry sell to private equity, and it seems like a great gig because they have board meetings in fabulous places. Why wouldn't I want to do that? Why is this a better option?
Sure. So it ultimately comes down to what we believe the fair value of your company is. While the private equity firms can seem cushy and very comfortable at times, they simply won't be able to raise enough debt in this case because of how capital intensive your business is. So ultimately, while they may be able to accommodate you with nice hotels and nice accommodations, ultimately you'll be missing out on a large amount of cash that you could by selling to Broadband Co. Does that answer your question?
Yes, it does. Thank you.
Thank you.